This is a video on doing the T accounts for problem 23A. And what I'd like to discuss just for a moment, when you look at these accounts, for example, cash, notice that instead of one column like we had in chapter 1, it's now a column that's divided in half. And the debit is always the left side, the credit is always the right side. If you think of the word debit, just putting something on the left side of the account and credit being something on the right side, that's the best way to think about it. If you think about debit being increase or decrease or credit being increase or decrease, that makes it much more difficult to think about. ADE, assets, drawing, and expenses, are plus and minus. Clear, which is capital, liabilities, and revenue, are minus plus accounts. So ADE, assets, drawing, and expenses, are plus minus. Clear, capital, liabilities, and revenue are minus plus, so that'll help you a lot. All T accounts are debit credit. No account will ever be credit debit. Okay, looking at transaction A, it says Morgus deposited $40,000 in a bank account in the name of the business. So cash is going up. So here's cash. We have to debit it to make it go up. We're putting an A in parentheses by it just to keep it, because we're not using dates, so T accounts are too little. And the capital account is going from 0 to 40,000, so it's a plus. Also transaction A for 40,000. Now notice that the debit equals the credit. That will always happen from now on. Debit must equal credit. And letter B, we bought waiting room chairs and tables, which is office furniture, on account for $1,330. So office furniture, which is down here, is getting bigger. So this is transaction B. I'm going to put it in parentheses. And the amount here was $1,330. That's our debit. And we are buying them on account. So we're not paying cash. It's a bill that we owe. So accounts payable is going up. We have to go to the plus side. So we have a debit to office furniture and a credit to accounts payable. So our debit equals our credit. Looking at letter C, we bought a fax, copier, scanner combination, which is office equipment, from Max Equipment for $595, paying cash $200 and placing the balance on account. So if we go to office equipment, and it's going to be increasing, and this is transaction C, and the price of the office equipment is $595. Now we are giving them $200 in cash. So we're going to go to cash and make cash go down by $200. So we've just debited office equipment for $595. We've credited cash for $200. We owe the balance. Now the balance is the difference between those two numbers. So here's, we're going to make the amount that we owe increase. So this is letter C over here. And the amount that we owe is going to be $395. So this credit plus our $200 credit to cash equals our debit to office equipment. Looking at letter D, we bought an intercom system, office equipment on account from Reagan Office Supply. So we go to office equipment, and that account is going to be getting bigger, so we have to put it on the plus side. And it's getting bigger by $375. And also in D it says this is on account, so we have to go back to accounts payable and make accounts payable get bigger by the same amount, because that's something more that we owe. Debit equals the credit. Looking at letter E, we received and paid the telephone bill. So if we paid the telephone bill, as you look at your expenses, there is no telephone expense in this particular problem. So we're going to have to put it in the utilities expense column. And this is an increase now of $155. So that's our debit. Cash is going down, so we have to go to the minus side of cash. And that's for 155. So our debit to our expense equals our credit to our cash account. Debit must equal credit. Looking at F, we sold professional services on account for $1,484. So we received money from our customers. So our cash is going up in transaction F, and it's going up by $1,484. Okay, and that's making our revenue get bigger. So here's transaction F again, and the amount that of our revenue, the amount of our sales. Debit equals the credit. And letter G, we received and paid the electric bill, $190. So the electric bill is going to go under utilities, so that the expense is going up in letter G. And it's going up by $190. And our cash is going down because we're spending it. Well, this is our credit. So our debit equals our credit. And again, it always must. Looking at H, we received and paid the bill for the state speech therapy convention, $450. It says to record this as a miscellaneous expense. So our miscellaneous expense is going from 0 to $450, so this is an increase in letter H. And it's an increase of $450. And we're paying cash for this as we wrote a check, so in letter H, our cash is going down. So debit, miscellaneous expense, credit, cash. That's our equal debit and credit for letter H. And letter I, we sold professional services for cash. Our cash is going up, so we go to the plus side in transaction I. So the cash is going up for $2,575. And this is also affecting our sales, so it's our revenue account going up by $2,575. Looking at J, we paid on account on a bill. Okay, so when we have something on account, that's accounts payable. When we make a payment on this bill, it's making the bill get smaller. So in letter J, we're going to be on the minus side, which is the debit side of accounts payable. And that's going to be for $300. And we're writing a check, so cash is going down for $300. Looking at K, we paid the rent for the current month, $940. Rent is an expense. It was 0. Now it's going from 0 to $940, so it's increasing. So this is letter K. And the amount of rent in letter K is $940. And we're writing a check, so our cash is decreasing by the same amount. Debit equals credit. In L, we paid the salary of the receptionist, $880. So the salary expense is over here. It's going up in letter L. And it's going up by $880. And our cash is going down by the same amount. Debit equals credit. Looking at M, the owner withdrew cash for personal use. When it's personal use, it's drawing. Drawing did have a zero balance. Now it's going from 0 to 800. So it's increasing the drawing account. So this is letter M. And it's increasing by $800. And we're writing a check. So our cash is going down by 800. Debit equals credit. And in letter N, as in Nancy, we receive money on account from patients who were previously billed. Accounts receivable is our customers when they buy from us on account and are going to pay us later. We are receiving money in letter N, so our cash account is getting bigger. And it's getting bigger by how much there? It's getting bigger by $885. So cash is going up. And accounts receivable is going down. And actually in F, I did something incorrect. In F, I was just reading here, and as we sold services on account. So in F, F should not be over here. So if you caught me on that, that's good, because it shouldn't be there. I'm going to just move this up, because it was a sale on account. So it shouldn't go there. It should go over here in letter F. I read it wrong. Okay, so accounts receivable is going to go over here.